Mr. Tulsian as well joins in on a discussion about the hammering in individual stocks. And Mr. Tulsian, many to chat with you about, but Educom comes to the top of mind because that stock has lost so much, and there's so many news articles about, large investors trimming positions, the business under a cloud, etc. Do you see more downside over there?
Sonia, I think the larger problem with the stock is, the question mark on its business, and in fact the reason of large investor exiting is a consequential, because of the concerns on the business. And in fact, if you really see the kind of valuations, which have been given on the given to the stock, has largely, punctured maybe a couple of months back because of the corporate governance issue, income tax raid, and the question mark on the going profitability. In fact, the credit squeeze, which we have been hearing at the company's end and all that, in spite of the healthy financials and all that, questions the past working as well. But taking all this into consideration, one tries to, a fundamental analyst tries to console that probably it can find a value maybe at about 180, 185, 190. But when you see the price in the way which it slides, and now it is ruling close to about 175, you need to revisit your calculations, you need to revisit your assessment of the stock, and probably feel whether 150 now looks the realistic levels or not. And suppose tomorrow if that also gets broken and falls to about 140, then conveniently we shift that target lower to 125. So taking all this into consideration, with a bold confession, I don't think that one can really put too much credence and confidence on these stocks, unless until the clarity on the entire all the issues comes out in public, which looks unlikely. So maybe in the given situations when you have the choice of so many stocks, other stocks available, it is definitely put an investors to away from these stocks, which in fact is the cause for such a slide that you don't see renewed buying interest at any level, and you see continuous selling by the large investors as well as the trading positions getting liquidated.
Mr. Tulsian, just want to ask you about some of these metal stocks and the way they have collapsed. Fundamentally, do they deserve to trade at lower values, or would you go out and buy any of them?
Then I don't think that any of them really deserves these kind of valuations, because first if you take a call on the ferrous, non-ferrous metal stocks, whether Hindalco, Sterlite, in fact all the commodity, whether you talk of zinc, aluminium, copper, everything is, that the domestic prices are derived from the LME, and if the rupee is strengthening, if you see the past trend also maybe of last 5 years, 10 years, whenever the rupee has weakened, all these stocks have really shot up because of the obvious reason that the domestic realizations have gone up, because ultimately the domestic prices are discovered based on the LME prices, and if your rupee is weak, obviously you discover the better prices. Yes, coming on the ferrous metal front, if you have the problems, maybe a plant like JSW Steel, which is not operating to its rated capacity, and now the largest plant in the private sector or close to the capacity of Steel Authority, there is obviously the shortage in the demand also. But because of the negative perception existing in respect to the raw material, you may take a negative or maybe a cautious call on that, but not at these level. I don't think that whether we talk of Steel Authority, Jindal, even if I exclude JSW Steel, whether Jindal Steel and Power, they really deserve this kind of valuation. So I won't be convinced with this kind of, or maybe the further fall expected. But still, whatever we may talk, the stocks are continuously seeing corrections. Even if we take any up move for a couple of days by about 4-5%, again next week or next day they start correcting further by 5 to 10%.
Mr. Tulsian, we were talking about the drop in IFCI in the morning. There's an unusually, higher cut that we're seeing this afternoon as well. Another 7% gone on the stock. How have you read into the movement on that one?
Sonia, holding the same view, because there are a lot of concerns seen in respect to the recovery of the amounts, which have been lent by the IFCI, against the shares, and the quality of the stocks, in fact to the promoters, because I don't think that there is any system of sanctioning the amounts, to the stocks or the quality of the stocks, and the procedure of risk management and the subsequent recovery at the right time. Because whenever the stock market falls, which we have been seeing many stocks, hitting lower circuit, and the moment you compel the borrower, to get that stocks release, he comes forward. In fact, I don't want to name the stocks, which we have seen there are many instances which immediately got traded off about or transacted off about 30-40 lakh shares in couple of hours, and the lower circuit got removed. But that kind of mechanism or the force is not seen on in IFCI, largely because of the style of working. So both the things are maybe the fear of mounting bad loans, or maybe the difficult recovery against the stock lending, and the procedure or the risk management system prevailing in the institution. Both are, I think, causing the discomfort, and share is correcting.
Mr. Tulsian, a quick thought on what kind of pain it might be inflicting on individual companies, because this earnings season we did see a lot of companies actually bearing the scars of the rupee move.
Then I think there was maybe little hope, when we saw the results by maybe end of October. We thought that probably it will not hit, and all the provisions or the mark to market has been made at between 48.50 to 49. And I think since it has again, the rupee has depreciated again by about 6%, and if the same trend continues, and even if the trend doesn't get reversed by 31st December, then obviously third quarter will also be having almost the equivalent burden, or the, I won't say equivalent, but at least 60% of the mark to market provided in all those companies in the second quarter. And this time it will be very easy for the analyst to take a call. Just pick up the Q2 results, see what is the M2M, take 50 to 60%, 70%, and they make a provision of that. So that is going to keep a cautious view on. And in fact, now we are out with the list of stocks also, because prior to the Q2 results we did not have that list. So this is going to keep a cautious view on many of the stocks which otherwise we were thinking that probably it will start moving up. Now will again take a halt, or may start correcting further from here on.
Okay, just before we wind up, Mr. Tulsian, one stock for you. Do you think Suzlon is getting ready to enter the teens now?
Looks like, because I have been keeping a view of that it will fall below 20, and if you need to put them, naturally the 19 comes in that category. So obviously I continue to have my cautious to mild negative view, but maybe not again teens at the upper range, not at the lower range.
Mr. Tulsian, what did you make of the emphasis management comments? They mentioned to us that pricing is stable, but clients are very, very cautious at this point, and the situation across the globe is a complete mess, in his words. How would you move on the stock now?
Sonia, I think that probably maybe the interpretation has been taken too severe, because as Bala has said that generally in such an atmosphere we give a wide range, and that is the reason they have given a wide range of 17 to 19%. Otherwise the range could have been shrunk to 100 basis points instead of 200 basis points. So I don't know, mentally generally the market presumes that since the Infosys managements have always been conservative in giving the guidance, it has always been it's a foregone conclusion that they will always exceed the expectations. So the mindset was that they will be exceeding 19%, and if they say that we will be probably we remain within the range and maybe at the lower end, is is a disturbing things that you get knocked off by maybe about 200 bits plus, and that is that's the jerk I think have been given to the market. So but I don't think that they will really be slipping below the lower range of the guidance given by